The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 24th day of August, and 24th day of August, and we've got the futures up 5 at 2008 That's the E-mini, and you can see that in the daily chart. This is really important because if there is a spike, sharp spike above 28.74, the round number high that was made 4 days ago, and it closed in the 28.76 area, that not only takes out the left side peak D high in this 120-minute chart of the E-mini, it extends this leg in the weekly chart and says, wait a minute, there is a chance that in the E-minis, we did in the cash S&P, but in the E-minis, the 28.89 previous high will be tested. So I'm considering that this is really the kind of tell on probably the rest of August into early September, if between now and Monday, certain things happen. And one of the certain things, if there is a Dow spike to the upside, very sharp, and at this particular point, the YM, which is the Dow futures, this is the 807 in the morning show. It'll be repeated again later this afternoon at 12:07, my usual time. I'll be back. I'll be away Monday through Wednesday next week, and I'll be doing just my opening call. That's my daily newsletter, but I won't be doing any shows, and then back again full-time at the Thursday, noon to 1 p.m. regular show comes again Thursday next week. So this is what I wanted to show you. The YM is up 50, but there was this peak that was made right here on the 21st of August at 25,885. Why is this important? Because there has been a pullback, but it's been a pullback in time, not really price. So if there is a spike to the upside, not only will this little doji candle that's formed up until now in the weekly chart be a very positive candle and extend leg E, but it's saying that the MACD, the moving average in the weekly chart, is good, and the stochastic at 89% is flat, and therefore we will not get that pullback that I've been anticipating is likely in the Dow based on the action over the last couple of days. So now this is what I'm looking at. In the so I'll go to the Dow, the cash position, that is the Dow industrial average. You can see that right here, the MACD is good in the daily. The stochastic's at 89%, but turning down quite sharply. So that's why it makes it an important session. Plus, you've got the rectangle test of the 25,800 level, and we've closed at 25,656 just after making that high. That makes it even more important. And you can see we've got a peak D in the weekly chart, in the 120-minute chart. So all of this is really important. However, I'm going to go to this as I'm doing the charts. You see the monthly chart made their U-shaped pattern. The MACD is flattened out, but it's still positive, but it's suggesting that at some point it's going to start to go negative. If there isn't it'll have to be a 300-point move in the Dow to get the monthly MACD very strong again. The stochastic's weak on balance volume is good. And that's why I'm saying that this is quite a key moment, because if the Dow pulls back into, so let's call it Monday afternoon, by closing under 25,000 right here, underneath 25,500. No big deal, it's only 150 points from here, but it becomes a big deal because that will probably make that a peak F rather than a very bullish peak A. So I'm watching this very, very closely. Look at the S&P, SPX.X. So S&P is trading at 2856.98. It made this unusual peak G right here at 2873.23, and that has gone above the all-time high right there of 2872.87. So in the monthly chart, this has actually begun a leg E in that U-shaped pattern. So I'm looking at this and saying this is a very important moment, because double tops are what you see very often in the longer term charts where if there's a stall at that previous left side high, it means that there could be at least a digestive phase. Doesn't have to be a breakdown, but a digestive phase. So numbers to watch next week. If the S&P closes any day underneath 2840, it's at 2856 right now. It's only 150 or so Dow points, but in this case, it'll be in the S&P 14-period moving average support. That'll be a negative, and that'll suggest, yeah, maybe there is a leg F in the weekly chart. Whoa. Now we're going to go to the QQQs. Let's do this right here. I just typed as usual. I typed in the wrong area. Very strong monthly. Weekly has really gone sideways for 4 weeks. Well, since the 5-week high of 182.93 all-time high. And you can see that it's kind of struggling here at 181.25 by 45 cents. Let's see how this closes out. And you've got until, I'd even put it until Tuesday of next week to close under 179. A close under 179 says, yep, probably taking some kind of a consolidation breather. IWM was very strong and then suddenly turned down late yesterday. Still leg E in the daily, leg G/C in the weekly. And that's going to be very interesting because it extended 170.20, 169.87. So this is now G/C in the monthly, and you usually don't get Gs. So this C is a very positive action in the monthly chart. Suggests even if there's a pullback, you should get a D later on. So very good action in the Russell 2000. Now we're going to go to gold. Gold is up at this point. Looking at it here, GC. Gold is up $4.9. I have to see whether or not there is going to be a break above the high that was made on the 22nd, and that's 1208.4 in the continuous contract. Why? That'll start leg B, and that'll be very positive, and that'll suggest with silver that gold is going to go higher. Silver's not a good chart right now. It's at 14.61. It needs to get to the 14.90 area, and that'll be a good sign. But it's really all about the dollar, because the dollar had a really nice session yesterday. It's given back quite a bit today, down 30 at 95.31. I'm considering that the dollar's in a consolidation phase, and the weekly chart says that the 94.50 should be very good support over the coming week or two. Let's just watch this, because if the dollar pulls back and crude oil, which is running very nicely up 70.76 in a leg C at this particular point in the daily chart, weekly is just improving, but the daily is looking quite good. And the daily looks like it wants to tackle the 69s. It's a 68.57 right now. And that says that if crude oil rallies, then we might see the IYT, which is the iShares Transportation Index, ETF, stall right here. And that'll be because of the XAL, which is the airline index. Airline index at 105.67, down 91, made a peak E and pulling back quite sharply, leg B in the weekly chart. This is saying, hey, be careful. That crude oil could be a surprise. Now, this is the thing about the Dow. The Dow has Chevron and it has Mobil, but look at Mobil. ExxonMobil is trading so-so, and CVX, which is Chevron, is not looking that good. This is going to be very interesting. Basil Chapman, futures are up, S&P's up 5. Dow futures up 56. I'll be right back. This is the preview.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the early, 8:18 show in the morning. It'll be recorded and played back at noon. Let's see, I believe we have a caller. Do I not have a caller? Don't I have a caller? John in Philly. Hi, John, how are you?
Good morning, Basil. Thanks for taking the call.
So, John, I know that you got a question there, and because I don't want to run out of time, the question you have, I believe, is the long-term outlook with the S&P. Is that correct?
Yes, to be very brief with your abbreviated show, here's the question I've got for you specifically. I have observed you in the past weeks, maybe a couple of months, being very disciplined, but instituting a couple of short positions in the Dow and other indices. Some have worked, and if they haven't worked, you didn't lose anything, so I commend you on that. My question is, in you doing those actions for your clients, do you see any potential that a short-term high could turn into something more significant? That's my question. I'll hang up and listen. Thanks so much.
Okay, thank you very much. Good question, John, and I'll explain a couple of things going on. I have one of my denners, one of the people in the den, a Tiger, who's probably one of the very first people to ever start working on the Chapman Wave methodology, counting the peaks, etc., who just asked me a good question as well. So, John, the two of you together have posed something that I'm going to deal with right now. There was a high that was made on the 18th of September in the S&P at 2816.76. It took more than 3 bars. It took 4 bars to break above it. However, all the characteristics have a correct characteristic of the Chapman Wave unconventional flat-based restart. A lot of words, a lot of explanation. We don't have time today to do it, but what it does say is that every time there's a rally, it comes back to retest the 2800 level. And that says that there is not an instant restart that takes it to a D, E, or F to go very much higher, but it goes somewhat higher and then it keeps coming back. And at some point very soon, it should come back and break the 2800 level. So that's number one. I'll try to do more, at least for my subscribers, if I have a chance over the weekend, to do a little bit of explanation about that technique. Now, what's really important and goes exactly to the question that you asked, John. First of all, I don't, at this particular moment, see anything other than a big consolidation, if it is. A big meaning point-wise. using time for the Dow, we've already been consolidating New York Stock Exchange since January the 26th. That is a long time for a consolidation in a mega bull market. So what I'm going to say is this. If you look at this particular chart right here, this is the S&P black background, very long term. You see these beautiful channels. It goes all the way back to the 1990s, through the 2000s, through the 2010s. And each time you get these fabulous channels, and we've got a channel right now that says, if you look at these previous peaks back in 2007, the high in November was an E after just a couple of months of a cup formation, like a V-shaped formation after the peak D. You can see that it's done that a few times. There's a D and E that was made back in March of 2005. Then there was a quick EFG to the high of May of 2015. So I'm taking this very seriously and saying, unless the S&P spikes very sharply, and it really has to do that by Labor Day, but probably the first trading day after Labor Day, you have to see the S&P somewhere in the 2890s, somewhere in there, maybe even the 29,000 area. And then I have to say, you know what? That is just way too big. That is not that double top pattern. That is very positive. Any pullback says we should just continue higher. So now let me go back to the real chart that we're looking at this particular point. The MACD in the weekly chart is good. The stochastic at 90% is good. What I am anticipating is a rotation through the market, enough to say this time there should be more bias to the downside than to the upside. And unless we get all the indices just plunging as we did here on that move that was from the 26th of January down to the first week of February, a straight down move, it says sideways, lower lows and lower highs, chop, 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 sudden big moves. You could even have a 1,500 point to 2,000 down move, a 200 point move in the E-mini. But I am looking at, in the E-mini, I didn't mean that. I mean the S&P cash, but I'm suspecting that this rectangle formation here is going to create huge support, and then it's going to be more scary news and sudden sharp drops that really take the market down and continue the sideways action until it's ready for a much bigger breakout to the upside. That's my thinking right now. Those are the parameters. Let me do that again. The S&P cash is suggesting there could be, this is a G/C, there could be one more pop to the upside, maybe just under 2880 or maybe just a tad above it. And then you've got to be careful because the pattern suggests that there should be another big pullback into this whole area of 2820 to 2800 to get a test of key support. When that support gets broken, then it should pull back. And that's where we will see whether or not the Dow is pulling back, the S&P leading the show, with the IWM, and I'll give you the number there. Here, the IWM has to be, it's got huge support at 170.66, actually 171.22 pre-market. It has huge support all the way to 167, 165. Remember I said if it closes under 165, watch out. It did that for just one day on the 30th of July at 164.20, and bam, it went right up to peak D. Now it's in leg E. So I'm suggesting to you that if there is a move to the downside, unless you get everything coming together with bad news, and it really has to be consecutive daily news so that the public, after 2 weeks, has heard the same phrase, negative phrase, over and over, maybe 3,000 times to different mediums and friends or whatever, and then everybody's talking about the same thing. That's the only way you're going to get some kind of crash activity as I see it. So, could I cover Facebook? A real quick question. So I think that's what we're looking at. I'll do. I won't be here Monday, Tuesday, Wednesday, but I will be here later in the week. But the parameters to watch: Dow has to hold by Tuesday. Must be, if it's holding above 25,500, that's good. If it breaks 25,500 after Tuesday, that's going to say we're in that consolidation phase. And any move in the Dow above 25,900 obviously very positive. So Facebook, a real quick question. Yeah, Facebook is done for now. It's just sideways trading. It might even chop between 172 and 185. But if Facebook at any point in the next week and a half to 2 weeks closes under 164, 166 was the low, 164, that's saying be careful. That monthly chart is saying a good couple of months of timeout is coming up for Facebook. Had a question about XLF. Of course, XLF is the financials. S&P Select Spider Fund. A close at 28.56, the high on the 7th of August. A close in the 29.30s anytime next week would be very positive. A pullback underneath 27.70 says, hey, XLF is taking a little bit of a breather. TLT will do that. TLT unchanged at 122.05. Watch this closely because it's suggesting you got to keep an eye on yields because they're going towards the lower end at this particular point of their range. Hey, this is Basil Chapman signing off. See you back here Thursday at my noontime period. Have a great day. Have a great week. Stay tuned. You've got Jason coming up, Larry Pesavento, Tom and Tommy, and then you've got Steve and Dave and Tom.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.